Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Street of TheStreet, and together we bring you the morning call. Going into the last trading week of the year, it's been a nice rally over the last 2 days, and today, futures have a positive tone, so that's a good thing. Does this mean we go into today continuing to be long?
I think you could pick your spots, and after a 2-day move like we've seen, it's hard to initiate new trades, but I think that you could stay with your equities, you could stay with your longs. You know, we've been in a portfolio approach ever since that November 16th low, trying to trade around positions along the way, and I don't see any reason why all of a sudden we start to get away from that. But what you want to do is you want to pick your spots, you want to have a hedge, and you want to just continue to stay with the rally, but entries and exits do matter.
The macro is certainly helping things out with the upgrade to Greece, and we've got more progress on fiscal cliff talks here. That should help going into the end of the year.
Yeah, well, going from what Greece went from junk status to something a little bit higher.
B minus by S&P, yeah.
So at least it's something. And it's showing you that little by little, some of the problems that were headwinds for the market are starting to lift. We don't expect Europe to just be blockbusters next year, but the convertibility risk was off the table. The ECB did what they had to do. There was a lot of things that have been coming into play. The euro, which we talked about earlier this week, has been rallying, showing you that some of the problems might be behind them. Dollar going lower, and that all put the potion together, and that's been higher equity prices and a lot to like for this rally, so to speak.
What levels are you watching in the S&P then going into the end of the week?
Well, if we take a look at the chart of the S&P, you'll see right here, it's been a nice methodical move. Here is that low on November 16th. If you remember, we had this uptrend that was intact from the June 4th lows. Right around 1440 is when it broke. That was a spot to switch gears, maybe take some risk off, and then right here, November 16th, was your area to get back involved. From there, we had a nice appetite down here. We held higher. So this was a higher low, which is constructive, another higher low, and then yesterday we actually had the power to break through this mini downtrend. So that shows you that there is commitment here even at these higher prices. So with that said, the old high is about 1474. I'm not sure if we get there by the end of the year, but I do think come first quarter of next year, we could be seeing somewhere in the midst of 1500 plus in the SPX.
Strength in tech over the last couple days has certainly helped the market. The Qs, for one, has been showing strength. What levels do you keep your eye on in that group?
Well, there's been this inverted head and shoulders pattern. When you talk about head and shoulders tops, which are usually bearish, this one actually was somewhat bullish. And technology is what led us lower a few months back, and now it's it's in line. It's not outperforming, but it's healthy to see. If you look at the chart here of the Qs, you will see that here's that small inverted head and shoulders pattern where you have the left shoulder, here's your head, and look within that head, that red dog reversal. Good spot to cover some shorts, potentially get long. From there, nice move into resistance, and then from there, it's been consolidating, creating the right shoulder. So yesterday we did break above this mini neckline. We've taken back a lot of these moving averages. So I think technology is in the game for higher prices. Obviously, all stocks are not created equal. There's some stocks leading, some catch-up plays. So I do think that it's a little bit of a mixed bag, but there is upside to a lot of these situations.
Oracle, for one, has shown strength, and they reported earnings last night that were better than expected, and the stock is going to move higher today, it looks like, even though it's near highs.
Yes, and it had a lot baked into the cake, so to speak, so for it to be up on this report, into resistance, I think is pretty constructive. I would say watch to see how it treats this 33.30. If it can get above and power through and close near the highs, you're going to see some energy in the tech space. If it fails here, I don't think it's that big of a deal considering where it came from, but I think with some time, it will be at new highs and something good to stay with.
Seagate is a stock that was a better performing stock yesterday. It's been basing above a certain level, and then yesterday got close to that 100-day moving average. Do you think we'll continue seeing momentum there and it can break above that?
Yeah, I think it's a lower level trade. If you go to the chart of Seagate, you will see that it's coming into a downtrend. It's nice and tight. Closing the highs yesterday. It's got to get above this 30 to continue. I do think that actually Western Digital, something which has been a bit more clean in the same space, had a much better move. If you look here, it held higher. It broke above this recent flag pattern. So all in all, not near the highs, but both of these stocks could be something on your radar and something to stay with.
F5 Networks moved up 5% yesterday. This stock, it broke above the 100-day. Would you trade it today?
I think we've been looking at some of the laggers in this group ever since we saw Salesforce.com break out to highs. You look at the chart here of FFIV, you will see that it was a nice trade there yesterday. We've been targeting it a few different times and off the charts. And again, these aren't leadership stocks, but every now and then, you're not going to be able to just go with leadership stocks. You could look for, nice patterns, and this one was one of them where you had resistance, broke above, closed strong. So this is in the game. More quality, obviously, is your Salesforce.com that we've also talked about, where you had a nice flag pattern and broke to the upside. But when stocks break to the upside and show leadership, there is attention on other stocks in the group, and FFIV looks like it's in the game, and even BMW looked like it had a decent move.
Okay, J-Bill, they're going to report earnings tonight. Yesterday they had a nice move, but they've been basing at this at the bottom of this bearish gap that they had more recently. I think people are looking to see if their more exposure to Apple is going to help them, because they have a lot of exposure to RIM and Cisco, so that's kind of been a negative for these guys. What are you thinking going into earnings tonight?
Oh, there's earnings tonight?
Yeah.
Okay, I typically do not take stocks into earnings. If you want to do something, do options, so your risk is premium paid. You look at the chart here of J-Bill, you take a look here, you'll see that there is not much expectations. Stock was as high as 24, had a gap down, it's off the lows. So if the earnings are, I think, just even decent, it'll be okay. At this particular point, it's showing you relative weakness. I would say avoid it, and then wait to see the report and see how it responds afterwards.
Well, we're talking about tech, so we got to talk about Apple. Yesterday, another up day after Monday's reversal. How are you looking at it today?
I think it's semi-constructive to get 2 days in a row. And if you switch gears when you saw it didn't break and cascade below 505, a lot of people were thinking 400s, and even I did. But when we broke below 505.50, there was no downside follow-through. It turned into a really nice long. The question is, can you get day 3? Can there be any power? I think people are used to, since the 700 high, all people have done on day 3 is sell it. So at this particular point, look where we are. I'm not going to get too far into it, but it did trade below this 505.50, closing the high. So that's the reason why I got long on the virtual trade floor. I still have some. I think the next objective is, can it clear this semi-downtrend? And look at it, from 700 all the way down here, we're talking about if Apple has the power enough to clear, 547 to 555, and that's just where it is in the world of Apple. I would say put a line in the sand right around this 522-ish. If it starts to go below 522, and then you just know that it was just a cash flow trade and there's no commitment to it. But if it could hold above, just say 522 to 525, I do think that there could be another trade if it breaks this downtrend, and then your next real area comes in at 570. So Apple has a lot to prove. At this particular point, some pressure is off, but I would still say take it, I hate to say, minute by minute, but that's the way I'm looking at Apple right now.
Yeah, it makes sense. Well, we're going to take a quick commercial break, and we'll get back into the holiday spirit with some retail stocks after this.
All right, maybe we won't go into a commercial break because we had our holiday party last night and we're a little understaffed, so we're going to go right into the retail space. So what's the first stock that we have on there?
We might as well start with Walmart. I mean, it was a great stock earlier this year. It's been showing some more weakness, though. Does it mean Christmas isn't coming for them?
It just means that you have to pick and choose your spots. I came into the year, there was a nice, tight, long-term channel, and I said that, this could be my retail stock of the year. My objective, I believe, was anywhere between 72 to 75. It went to 77. And since then, if you look at the chart of Walmart, it's come in, pretty substantially. And at this particular point, you did have a breakout failure in Walmart. So that was a little bit of a signal to sell some. If you look at the overall pattern here, you'll see this is what I really liked in Walmart. I said if it breaks above this 62, looking at the long-term chart of Walmart, you look at the monthly, which is what I loved. Okay, the reason why, because look at this chart pattern. It took a decade of consolidation to finally get you this nice move. But some guys are a little upset. It's not at the highs of the year coming to the end of the year, but here is your buy price. This is where you could have sold some. Here was your technical breakout failure, so it gave you a signal to perhaps get out of the way. So at this particular point, where it is in Walmart, I would say, if you sold it well and you sold it correctly, why not look for a little bit of a buy? I don't own it, but I was actually looking at it yesterday saying, it was as high as 77, it's right around 69, something with a nice dividend and probably does well next year. This is not a bad entry to buy the dip on Walmart, but it's going to take a little bit of time to get some momentum back.
Target has been a best-in-breed retailer. It's been consolidating, though, more recently. I think that this is one company that maybe could surprise the upside when they report earnings. What are you seeing in the stock?
I'd see like other retailers, it's just not on the highs, and it just fell out of favor. It's not leading like the banks and the home builders. But if you look at Target, and you sold it correctly, there's some potential here to buy some back. So this is when this small little ascending channel wound up breaking to the downside. You had a pretty potent 2-day move here to shake things up, and then from there, it's been just methodically going lower. You then had 2 days ago a nice little reversal where it broke lower and closed strong. Yesterday you had some follow through. So I think at this point, I think you could be long some target. You could put a stop right here, but it has a lot of resistance in front of it. It's not a leadership stock, but if you're looking to put some things in your portfolio, this one looks okay. I would say it's a B- trade.
Yeah, retail's a little tough right now. Let's take a look at Macy's stock. I spoke with Terry Lundgren, the CEO, on Black Friday. He was really optimistic about sales, and they were strong right out the gate there. But the stock, if you look at that, it's been consolidating for a little while now. How much more time does it need to consolidate before we can see a move higher?
Well, that's the question on a lot of these. There's really no momentum in some of these retail names, and that sometimes happens between Thanksgiving and Christmas because the expectations are so high. If you look at the chart here at Macy's, you'll see that it did bounce off the 200-day, which was right here. So if you're a dip buyer, so to speak, this is your spot to get involved small. But again, this is a choppy mess right now. There's really not that much momentum. I would say if it starts to get above this mini pivot right here, maybe above 40, it starts to act better. So I would say Tier 1 at best. All these retail names, I would say they're fundamental plays because the charts right now aren't saying that there's much movement in front of them.
Right. ROST Stores, for another example, if we want to touch quickly on it, it's a weaker stock. They're like the value retailer. You think they might be doing better in these economic times, but what do you see in the chart?
I see, a bottom fish type trade. So if you look here and you're not involved in it, you go to the chart, wow, below all the moving averages, not showing you leadership, not the place to be. But you did have somewhat of a wide range bar 2 days ago with, I guess, some other retail. You could say that there's a semi-double bottom here, right? Here's your reversal, rally up, held higher, but this stock is just out of play. So if you're a big ROST store fan, which I am not, maybe you nibble a little bit, but it's got a lot to prove before it starts acting better. So, at that particular point, it really has to start to clear this area. But then again, big resistance in front of it. I don't think it's anything really worth your time for a trade. But again, for fundamental people, do your homework because technically it's not showing me much except for a small double bottom.
Yeah. All right. Well, fundamentally, Nordstrom is one that actually Stephanie Link at Action Alerts Plus has her eye on here. They've got a lot of good things going. They're integrating their internet e-commerce with the stores. They're doing a lot of technology, putting a lot of things in there, and they got the right products, so that helps. And it's down a lot. Stephanie likes to find value, so she can see that upside. But is there a trade?
At this point, there's such a difference between value, fundamentals, and technicals. So
right.
If you want to put money to work and you're not worried about the time, and you don't have such, and you just, I don't know, and that's what you do. You look at this chart, and it looks like it's trying to put a bottom in. As far as a trade, if you're looking for something with movement, I would say you kind of look elsewhere. But if you go to the chart here, you will see that, it has pulled in from the highs. It's below all the moving averages like the rest of retail, but it did perk up yesterday, closed near the highs of the day. I would say short term gets above this 52.5. It's got some room, but really, all these things are just technically not in favor right now. So at this point, there's better places, faster places to put your money. But if you need to be in this, just make sure you're long versus stop, which right here is about 51.40.
So retail might not be the trade of the end of the year, but let's do some quick hits. Let's talk about FedEx. They reported earnings this morning. They beat analyst estimates by a couple cents. Sandy was definitely had an impact on the quarter, but they have some other things that should offset that going forward. Initially, the stock traded down a little bit. I don't know exactly what it's doing right now, but what do you see in the chart? I think Stephanie Link owns this. She'll probably buy it on weakness today because she sees upside in the future.
Okay, well, if you look at this stock, you'll see that it is at resistance, and if it's down a little bit, maybe it needs a little bit more time, but over time, I would say there's a big breakout area around 94. You have big support here around 90-ish, so as long as it stays above this 90 area at some particular point coming into next year, economy gets a little bit better, this 94 shouldn't be too much of a problem.
How does that compare to UPS? UPS is a little more rich on a valuation perspective.
Well, you look at the chart of UPS yesterday, take a look, nice wide range bar. It shows you how some of these lower level trades are doing okay. So if you didn't hold it through this downtrend, and you saw a nice tight pattern, which a lot of these lower level trades have been doing, yesterday you got rewarded for being there. So this igniting bar could ignite a new move as it engulfed all the moving averages. So, I would say you could stay with this trade. Above 74 shows commitment, and next real level here doesn't come to about 76.5, and then you have the upper area, which comes in right around 79.
And GE, there was a buyback announcement this week. What about the stock?
I haven't heard many traders talking about it. I know that it had a better move earlier in the year, and it's been slowly coming in, and it hasn't really rallied with the financials. So as the financial rally broadens, maybe people will say, oh, what about GE? We need to put some money to work. So if you look at GE here on the chart, you'll see this is when it had a pretty fast and furious move from this area before topping out. Look at this little red dog reversal right there, and then boom. Anyway, it's been repairing itself since earnings. It's looking okay, I would say. 22, above 22, it can continue. I think people are trying to find some things to place money in as the rally broadens out. So GE might get a little bit more attention. So as a trade above this 21.95, could set it in motion back to highs. But again, not really leading the tape, but something to be in if you need to have some kind of money, on the table.
Okay, and then how about gold and silver? They've been weaker. Is there a short here?
I think a lot of guys were questioning what happened with gold yesterday and silver. I know for me, there are times to play the metals and times where they don't make sense. And for the last 2-3 weeks, gold had a lot of different reasons to rally and it didn't. So that always tells you something, that something might be wrong. So instead of asking questions, what's going on here, stay out of the way. I don't think I've touched either one in weeks. And if you look at gold, you'll see that yesterday it broke a pretty significant level. If you guys remember, last time, there were a few different moves in gold and the metals that made sense. One of them was right here in August when it broke above and had a really nice move before, breaking this upper momentum level to get to the downside. I know for me, I was a little excited about it right here, but when it broke out, I was in it for this little 2-day trade, but more in silver, but just in the metal move overall, and then boom, that one day it came in, it was down, it sliced it, and it never recovered. It never filled this gap. And look, even here, another one, lower high. So, I've been talking about this trend line here, 162 to 164, and it sliced through it, pretty sharply. So at this particular point, it seems weak, it seems out of favor. I'm not long, I'm not short, but I would just be very careful with the metals. But sentiment's starting to get really negative, so you know what that means. That means it might be ready for something. But at this point, it's been weaker. There's been a lot just more smoother areas within the market to be involved in.
A lot of different areas easier. For one, Amazon has had a great run lately. I don't know if you want to touch on that.
Yeah, Amazon, we talked about it off the charts, and I think the price point sheet yesterday showing you that 255 level. And, if you look at Amazon, as far as high beta stocks, look at this descending little channel here or descending trend line that it broke above with velocity, quick move up, held higher, showing you commitment to this move. And then yesterday for traders, nice little move above 255. And I think it even got downgraded intraday and held it pretty well. It's right back almost at historic highs, so that's very impressive. I know a lot of people say the PE is high and they don't understand it. So if you don't understand it, just don't be a opinionated short, just get out of the way. But Amazon investors and institutions, they have a lot to like here as it's back at historic highs. So if it could continue to go sideways up here, I think you do see another move in that little pivot is 263.11 now. But this is in high beta land. This one is the king of the domain.
It's the winner. Well, that's the stock. Those are the stocks we're watching, the levels in the S&P 500 that we have our eye on, and also some sectors that we keep a close eye on. Be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.